All right. Good morning, everyone, and welcome to the next workshop in our virtual ministry fair, Servants of the Spirit, Gifts for Ministry. Before we begin, I'd like to thank Ms. Ada Ramirez for providing Spanish translation for today's session. There is no default language, so please be sure to click on the interpretation icon at the bottom of your screen and select English or Spanish. As a reminder, the session is being recorded and will be available for viewing on demand on the EDLA Diocesan Facebook page and YouTube channel. And a link to that video, along with the resources presented, will also be available on the EDLA Convention website at www.diocesanconvention.com. We're joined this morning by the Reverend Michele Racusin, CFO for the Diocese of California, for the third session in our series of Training for Treasurers, added to our schedule by popular demand. At this time, I ask everyone to please mute yourselves, but we would love to hear from you. Anytime you have questions or comments, feel free to put them in the chat and we'll answer them throughout the presentation in the order asked. And now it is my pleasure to turn it to our Bishop Suffragan, Bishop Diane Jardine Bruce, for opening prayer.
Good morning, everyone. It's so great to see you here today. And let us pray before we dig into numbers. Numbers always a wonderful thing to dig into on an early Saturday morning, especially for those of us that really love numbers. So the Lord be with you.
And also with you.
Holy Jesus, our friend and stronghold, you visited the apostles as they labored with their fishing and granted them success. Come and visit us in this meeting so that the work of this session may also be fruitful. Untangle all the knots and smooth out the rough ways as we with confidence begin this spiritual work of service in the sign of your cross, in the name of the Father and of the Son and of the Holy Spirit. Amen.
Amen. Thank you. And now I turn it to you, Reverend Michele.
Thank you. Thank you for coming. It's good to be here. It's good to see all of you. I'm going to toggle between a presentation and an Excel spreadsheet. So because the numbers are like mice print on an Excel on the PowerPoint. So we're going to start off with the PowerPoint. All right, so hopefully you can see the PowerPoint slide. So we're going to look at understanding church financial statements. And as you know, church financial statements are a little bit different than the ones that you experience in the business world or the corporate world. And so for people that aren't aware of that, when they first dip their toes into sitting on a vestry or leading a parish or a mission, oftentimes they look at them and they're just different. It's almost like a different language. So as we continue here, I want to ask a question, and please put it in the chat, your answer in the chat, and that would be, why is it important? Why is it important to be able to read a financial statement, a church financial statement? So go ahead and just jot down things in the chat.
Go ahead and put any comments in the chat so that you understand what's going on. So you can catch potential financial misconduct.
Okay, great.
In order to share a relevant view of the church's fiscal stability, and it's critical to managing a parish.
It certainly is. So, I mean, a couple things, right? Back in the day, the priests or the leaders of the congregation thought that, well, you know, the vestry or the bishop's committee will take care of this. They're the fiduciaries of the financial aspects of the church, this ministry of the church. But that's no longer the case. In today's world, we need to really embrace that piece of stewardship, that piece of ministry. It's vital to the health and the organization of the parish or mission. It also lets us know what's going on in the parish. And if someone comes to you during coffee hour and they're asking you about something on the financial statement and you can't understand it, you can't explain it to them, how does that look for basis of transparency? And if people don't feel secure, if they don't feel like they understand them or you understand them, what's your donor base going to be like? Do people give when they don't understand? So one of the other things that's super important about this is it tells what the priorities of the parish are, right? So for example, if someone comes and says, you know, someone comes to your church and you say, you know what, stewardship is the most important thing, outreach is the most important thing, and they look at your financial statement and there's no line item for outreach, or the line item on outreach is very small, what does that tell you? What does that tell that person? So that's another reason why this is so important. So what exactly do the financial statements tell us? Well, they actually tell us the story of the congregation. It's going to tell us what is important to that congregation. If they come and they say, you know, our music ministry is something that we very much value, then when we look at the financial statement, we may expect to see line items for concerts, or line items for the repair and the refurbishment of an organ, for example. If they say that one of the most important things for us is education, we can look at that financial statement and say, I can see this. They've got a line item to pay for EFM. Oh, there's a trip to Israel. There's a group going there to study, you know, where Jesus walked. It shows the history of the congregation. You can look at the financial statements and you can say, oh, you know, they have a mortgage for their hall. And this is important to them because they have events there. They welcome the community there. Or they have groups that come and use the facility. So it shows the history throughout time, and it shows a mortgage perhaps that's being paid down. And it may show how long the parish expects to continue paying it. It also summarizes the financial transactions over a period of time. It shows what the sources of funding are for a parish. So that would tell us, is it important to this congregation to leave money in their will for the well-being of the congregation for future generations? That would be in there. Another source of funding, are they subsidized by the diocese? Do they have a big chocolate festival that every year brings in income? It shows us the uses of this funding. What's important to this congregation? How are they using these valuable resources that people contribute? You know, are they using them for education, for outreach, for XYZ? So it tells us that. And then it also tells us, do they have enough cash to pay their bills this month? Do they have a lot of long-term debt? And remember that all debt is not bad. So they may have a mortgage for a new sanctuary, or maybe a home that they've opened for homeless people. So it tells us that and much, much more. So as we move forward, let's just look at a little bit of vocabulary. We're going to look at two accounting methods today. Now, there are various accounting methods. Some are acceptable and some aren't, and some may be acceptable but not advisable. So we're going to look at two of those methods. We're going to look at 5 different types of accounts so that you have a basic understanding of what these accounts are and how they're used. And we're going to look at 2 financial statements. We're going to look at the principal financial statements that are important for your congregation and for your vestry or bishop's committee. So as we're looking at accounting methods, there's 2 basic accounting methods. One is cash basis. So if you are over 40, you might think of this as your checkbook. You write a check, you're paying an expense, and it's gone, right? Or you get your paycheck and you put it into your checkbook and you've recorded the incoming receipts. Now, if you're under 50, you may think of this as your online cash balance or your ATM receipts that you get. So, but basically what it is you're recording things as they happen. You receive cash, you record it as revenue. You pay a bill, you record it as an expense. So contrast this with the accrual basis of accounting. With the accrual basis of accounting, many of these items are recorded when they're promised to you or when a debt is incurred. So for example, your parish has a pledge drive and you receive these pledges, these promises to pay. With the accrual basis of accounting, you would record those pledges as income at the time that you receive the pledge. So when you receive payment on that pledge, it doesn't increase income because that income has already been recorded. Conversely, when you incur a liability, like you receive your electric bill, you record the expense before you actually pay it. Now, in my most unhumble opinion, I would say that in a church setting, the cash basis method of accounting is really the best method. We're not Chevron, we're not PG&E, we're not some big company that is required to keep our records on the accrual basis. The cash basis is more intuitive. It's easier, so you can transfer, from one treasurer to the other without any special training. And it also makes a whole lot more sense in the congregation setting, because if you're recording pledges as you receive the pledges, rather than as you're actually receiving the pledges, your P&L statement, your expense statement is going to look fabulous. But that might not be the case because you haven't actually received the money yet. So I strongly recommend that you keep your books and records on the cash basis. And anytime you have a question, just throw it in the chat and Samantha will let us know.
We actually do have a question.
Okay.
Is there an instance where you would use both cash and accrual?
No, you will use one or the other. Now there is a modified cash basis. There are some other hybrids, but don't use them. Just use the cash basis. That's the easiest, it's the cleanest, and it is the most informative for your congregation.
How would you track the pledges?
So the way that you track pledges is you keep them on a separate ledger, right? So you know that the person has pledged X amount, and there are many software systems that will track them for you without actually putting them in your income statement before you receive them. Okay, so those methods are out there, but it's really, really best not to record them as you receive them, only when you receive the payment. Okay. All right, so let's move on and look at the different types of, my mouse is not moving. Hold on one second. There we go. Okay, the different kinds of accounts, okay, because the accounts are really the building blocks for our financial statements. So the sources of funds for ministry, these are your pledges. This is your plate offerings that come in. This is the amount that AA gives you. This is your preschool or rent. Uses of funds are like your expenses. So your electric bill, your salary expense, your benefit expense. Assets are the things that you actually have that are of value. Your church building, for example, the cash in your account. So those are assets. Liabilities, these are the amounts that you owe. Now, if you're on the cash basis of accounting, you're not going to put in an account payable entry for when you receive your electric bill. You're going to actually put it as an expense when you pay it. But there are some liabilities that are required to be on a cash basis statement. And we'll look at those when we get to the actual statement itself. But keep that in the back of your mind, that just because you're on the cash basis does not mean that you won't have any liabilities on your statement of financial position. And then net assets is the kind of tells you the health of your congregation. It's the difference between your assets and your liabilities. So think of it in terms of your own personal financial statements. You have a house that's worth $500,000 and you have a mortgage on it that's $300,000. The equity that you have in your house is $200,000, right? So it's the value of the home less what you owe on it. That would be your net asset for your house. So that's a similar way to look at it.
We have a question about expenses that I want to put on your radar, but I have a feeling that you're going to answer this later, and this might be opening a can of worms. Would a credit card expense be accrued or recorded when the statement is paid?
Yeah, so on a cash basis, you would record the expense when you pay the bill. Okay. All right. So we basically have two different financial statements. We've got the statement of financial position, which in corporate language would be the balance sheet. So the beginning statement of financial position tells us where we were. Okay. So if I'm looking at this statement of financial position and I have my beginning balance and my ending balance, the beginning balance tells me where I was at the beginning of this period. So if this is comparing the month of May to give to the vestry, the beginning is where we were at the beginning of May, and the ending is where we are now. What happens in between is what goes on the statement of activities. Okay, and the statement of activities is like the corporate profit and loss statement. We're going to look at this in a little bit more detail. So if your head is spinning, just hold on. So some of the differences between the church accounting methods and the commercial accounting or corporate accounting is that the commercial accounting calls the statement that has assets, liabilities, etc. They call it a balance sheet. But in the church world, in the nonprofit world, it's called the statement of financial position. Okay, so when you look at this statement, if it's properly labeled and it says statement of financial position, just keep in the back of your mind that, oh, this is the statement that in the corporate world is called a balance sheet, and it has assets and liabilities and net assets on it. So assets, liabilities are the same terminology in both of these, but in commercial accounting, the net assets are called owner's equity, and there's stock and retained earnings, etc. But on church financial statements, we have net assets, which would be equity, and then we have to separate them out by funds that are ours but with donor restrictions and those without donor restrictions. So basically, if someone gives you $100,000 and they say, you use this for whatever you need it. If you need to pay for a sabbatical, if you need to pay salary, if you need to pay electricity, if you want to use this for a youth program, you use it for whatever you want. Those are without donor restrictions. If someone gives you $100,000 and they say this is to be used only for youth work, then that has a donor restriction. Now, this is really important because you cannot accept a gift with a donor restriction and then use it for something else without getting permission from the donor. It's also important because within your organization, within your congregation, you should have a gift acceptance policy. Reason being, if someone came to you and they said, here is $10,000, but this gift can only be used to put red spinners on the rector's car, because I think this is really going to be a good evangelical tool. Well, the vestry needs to look at this and say, do we really want this? Do we want to accept this gift with these restrictions? Okay, does that make sense? So you want to make sure that just because it's money coming in, you want to make sure that it's something that is going to be used for your ministry, that it fits with your mission statement. Another example of this would be someone gives you a plot of land, okay? And you're thinking, wow, this is like LA County, San Francisco County. This is like going to be super valuable. But when you look at it, you find out that it's a small plot of desert land that's landlocked. Do you want to accept that gift? Because it means that you're going to have carrying costs and it's probably not a very liquid asset. So if you accept it, you may be carrying this on your books for the foreseeable future. Okay, so that's why it's important to have a gift acceptance policy and to understand what your mission is so that you know whether to accept a gift with particular donor restrictions. All right, so we're going to actually look at a financial statement now. So we're going to start by looking at the statement of financial position. So what this does, and keep in mind that if you're thinking corporate world, that this is your balance sheet, okay? So what this particular financial statement does is it gives you a snapshot of your congregation at any point in time. So you can pull the statement of financial position on January 1st or January 5th, and it is going to give you a summary of all of the activity that's happened up until that end date. It is cumulative throughout the life of the congregation. It shows your net fund balances. So a fund in the church world would be something like a kind of a siloed account that's set aside. So a fund could be one that's a music fund. These would be funds that are restricted just for the use of your music ministry. Now you see this oftentimes when someone has an antique organ or big organ, and they have a music fund or an organ fund because they have to fund the repairs and maintenance of the organ. So this would be a separate fund. You can't take money out of your music fund to send your youth to a mission trip. That's just for music. Sometimes on churches, you'll see an altar guild fund. And this money would probably be used for, you know, a new chalice or extra purificators or things that the altar guild needs. Operating fund is the fund that you use to pay your salaries, to pay all of your operating expenses. Okay, so that's where the lion's share of your assets will probably be. So this shows the balances, your net balances in these different funds. And the statement of financial position always balances. Okay, if you pick up a statement and it is out of balance, you have a problem. All right. So basically, you've got this accounting equation that keeps your statement of financial position in balance. And basically, it's assets equals liabilities plus net assets. So when you look at that, you can just have that in the back of your mind. So keep that slide at your disposal. And if your balance sheet is out of balance, this is going to tell you how it's out of balance. All right, now I'm going to switch screens quick here. All right, so hopefully you can see this Excel spreadsheet. So basically, this is a very, very, very simple example of a statement of financial position. So it's it's at June 30th. Okay, so this is cumulative throughout the life of your congregation up until the point of June 30th. It's a snapshot of where you stand at June 30th. So at June 30th, in your cash account, you have $155,000. Okay, so cash is an asset. It's something that you have. You have also an account that has endowments in it. Okay, so you've got $250,000 in endowments. Now, an endowment is funds that are set aside where you don't invade principal. You only use the earnings, and that's the piece that you can spend. All right, so that's what an endowment is. And you have your church building. Okay, so these are all the assets here. And obviously this is very, very simplified, but just gives you an idea. So we've got, this church has 3 assets and they total $1.9 million. So let's look at the liabilities that this church has. Now this is cash basis, but look, we have payroll taxes payable. And you might say, well, wait a second, I thought you said that you don't put anything on the balance sheet, any liabilities. You don't put those things on until you actually pay them. The reason I put this up here is because payroll taxes are the exception. All right, so you should always have payroll taxes payable on your balance sheet until you pay them, or on your statement of financial position until you pay them. Okay, and this is super important for vestry members, bishops committee members, because you want to make sure that your payroll taxes are paid currently. that is super important because the penalties for not doing so are extraordinary. So if you don't pay your electric bill on time because you're paying your payroll taxes first, that would be a good decision. Okay, so super important. All right, the other liability that is on this statement of financial position is the mortgage. Okay, so large liabilities still show up on your statement of financial position on a cash basis financial statement. And it splits it between the current portion of your mortgage and the rest of your mortgage. Okay, so you can see that we've got current liabilities. So those are basically liabilities that are due within a year. And then you have long-term liabilities or non-current liabilities, and that is everything that's due a year or later. And this is important for you as you're reviewing these financial statements, because you know that during the year, you're going to have to pay $36,000 in principal on this mortgage, and you need to plan accordingly. Okay, if everything was just down in one blob under mortgage payable, you really wouldn't know how much you need to plan for the current year, what your cash flow is going to be. And then you go down and you can see the net assets, the ones without donor restrictions, the 617,000, and the ones with donor restrictions. All right. So when you look at this, you can see that the total liabilities and the total liabilities and net assets equal the total assets. So we know that we're in balance. Does that make sense? Okay.
If you do have a question or comment, go ahead and put it in the chat in case it doesn't make sense.
Okay, I'm going to switch over to the slides again. Okay, can you see it now?
Yes.
Okay.
Oh,
All
we
right.
do have a question.
Okay.
How current are the payroll taxes, by pay period or for the year?
Though that's a great question. So they are going to be recorded every pay period, and then they are typically paid after that pay period. If you have a payroll company, if you don't, you probably are going to pay them quarterly when you file your quarterly tax return. But I strongly advise that you use a payroll company, because the payroll tax laws change so frequently, and the penalties for getting it wrong are way too high. So just have a company do them, but make sure that they're actually paying the payroll liability for you. Okay. All right. And this is just one kind of like, just to refresh our memory. In the past, and the past was only a couple years ago, the net assets were classified as unrestricted, temporarily restricted, and permanently restricted. If your statement of financial position still has it this way, you're using old terminology. The new terminology is to have with donor restrictions and without donor restrictions. Okay, so just kind of an FYI. So
we have another question about liabilities, actually, if I can interrupt you.
Sure.
From the example that you gave, the church has liabilities of $936,000 against the building's worth. Is that typical?
I'm not sure I understand the question, but oftentimes, or almost always, when a church has builds a building, purchases a building, they don't pay cash for it. They're going to take part of that as a mortgage. And so whatever that mortgage is going to be reflected on your statement of financial position. So depending upon how cash flush or what kind of cash management tools you're using, that will determine how much of a mortgage you had to take out. And one of the things you want to look at when you're reviewing your statement of financial position every month is that mortgage decreasing every month? You want to make sure that it's actually being paid and that liability is decreasing. So I don't know if I answered your question, but that's kind of in a nutshell how to look at the mortgage itself.
Okay.
Okay. So other things to look at when you're reviewing the statement of financial position. First of all, does it balance? Okay, if it doesn't balance, then you've got a problem. The statement is basically worthless. Okay, and this can happen. A lot of systems will not let you print a balance sheet if you're out of balance, but there are systems out there that will allow you to print an out of balance statement. And these are the software companies that are a little bit more sophisticated, where you can kind of build your own reports. And when this happens, the most common reason would be that there's a missing account from your statement of financial position, that somebody forgot to add one of the accounts in, so you don't have all of the accounts on that statement of financial position that need to be there. Okay, so that's typically the reason for it. Because most systems will not let you make a journal entry that's out of balance. Okay, so QuickBooks, for example, it will not let you be out of balance. But if you're using some of the other software systems, you can be. So that's the first thing you look at when you look at your statement of financial position. Is it in balance? Okay. And then you want to look and you say, are the balances on this normal? Okay, because if you're looking at cash, and it says that you have a negative $10,000 balance in cash, well, that would be a sign for alarm. Well, okay, maybe not panic, but of concern, shall we say, right? So that could happen because you don't have any money and you're overdrawn, or it could be that your bank accounts aren't being reconciled on a timely basis. And so you've got pledges that weren't recorded, but you've recorded your expenses, okay? So you want to look and you say, okay, are these balances normal? The other thing is that the mortgage, if you have a mortgage, you're going to want to monitor that, because you want to make sure that that is decreasing every month, but you also want to make sure that it's decreasing by the amount of principal, right? Not interest. And sometimes what happens is you've got a bookkeeper and, oh, we paid $100 on our mortgage. They take $100 off of the mortgage off of your statement of financial position, when it really should be $90 in interest and $10 in your principal, right? So those are the kind of things you want to kind of keep an eyeball out for. Does it seem reasonable? Is it decreasing? You also want to look and see, do we have enough cash to pay our current obligations? We know that we've got X amount due in the year on our mortgage. Are we planning accordingly so we can make sure that gets paid? If we have payroll taxes that are increasing on here, do we have the cash to pay them off? All right. And then part of your financial report could be that your treasurer comes and they say, okay, here's the balance sheet. Either A, all of our bills are current, we've paid everything, or we didn't realize that in the summer, in the desert, the air conditioning was going to be $1,000 and we're kind of in a pickle. What can we do? It's not paid yet. It's not on my financial statement yet, but we have this bill. So those need to be the kinds of questions that come up as you're reviewing your financial statements every month. Okay, make sense? Is the debt decreasing? Oh, is the corpus of the endowments being maintained? So remember we said that the endowment is a financial asset where you can only spend the earnings. So if you see the principal balance in that endowment account going down, you got a problem. So that's something for you to keep your eyeballs on, all right? And then the other thing is that as you're looking at your different funds, you want to make sure that the intentions of donor restriction funds are honored. Because if you start pulling out of a restricted fund to pay for operations, you've got a problem, all right? Make sense? Okay. I have lost my mouse. Here we go. All right, so let's look at the second important statement, and this is the statement of activity. So if you're in the corporate world, you would know it as a P&L statement. So with this particular statement, this shows the activity over a specific period of time, and it resets at the end of that period, okay? So for example, at the end of your year, December 31st, on January 1st, it resets. All your P&L is at 0 on January 1st, right? So unlike your other statement, the statement of activities that's cumulative throughout the life of your institution, this one resets at the end of each period. And it summarizes all of the uses of your funds and all of the sources of your funds, right? So it's going to summarize all the pledges that you received within that specific period of time. It's going to show all of your expenses within that particular point in time. And it's also going to show the performance, for lack of a better word, compared to your budget, compared to what you planned on. So that's another important thing. Now, sometimes you'll look at your statement of activities and you'll say, wow, you know, we have really overspent in this one particular category. But keep in mind that all expenses, there are expenses that are not paid ratably throughout the year, right? So insurance, for example, is oftentimes paid quarterly. So if you see something that this bleep in your expenses, there might be an explanation that's not a cause for concern. So things are either not received ratably or expended ratably. Does that make sense? All right. Now let me go back to Excel. All right. So let's look at the statement of activities or your P&L statement, okay? And so on this one, you can see that, and this is the proper way to do it. Oftentimes a congregation will move the column with donor restrictions to the bottom.
Can
so
you zoom in on it a little bit?
I'm sorry, what?
Can you zoom in on it a little bit?
Oh, sure. Let me see. Oh, wrong way. Oh, okay. Can you see better now?
Perfect. Thank you.
Okay. All right. So we've got the column that's without restrictions. So remember, that's the money that you can use for anything. The one that's with donor restrictions would be somebody gave it and they said, this is only for youth group. This is only for Ultra Guild. This is only for the organ. All right. So this is important because you need to see how much you have to spend on electricity and salaries and everything else. Okay. All right. So we're going to look at this one and we're going to say, okay, so let's look at the changes in our net assets. This is the support, would be like the income. And we've got paid and pledged. So during this month, okay, because this is for the month ended June 30th. So for this month, one snapshot here, we received $10,000 in paid and pledge. No restrictions that came with that. We're also in the middle of a capital campaign. And this capital campaign is for something that's very specific. So we can't take the capital campaign money and say, we're going to use it for the electricity. No, we have to keep it separate and account for it separately. So we've got capital campaign money that came in. This month, we got a check for $100,000. And so that's with donor restrictions. And then we have some investment income. So we got $25 that's just from our savings account maybe. And we got $250 that maybe was from the income from an endowment or something. So here are our totals, the total support. Now, sometimes, and I'm trying to put different examples on here so you've seen this once, right? Because this isn't going to probably happen every month. But let's just say that you had a restricted asset, but the restriction was at June 30th in 2021. If you haven't used this $5,000 of restricted asset for the purpose in which it was intended, you may then use it for whatever you want. Okay, so this often happens is, say, like someone says, I'm donating this money for an organ, but if you sell the organ at some point in time, that money can be released to your general fund. All right. Or it could be that here's $10,000 for the youth trip. Whatever you don't spend for that, you can just use for whatever you want. So in this instance, we had $5,000 that was able to be released from a restricted status to be put into operations. And so this is just a way of being very transparent. We were able to release it. So we're decreasing our restricted assets by $5,000, and we're adding it to the one without restrictions, because now we can spend it for whatever we want. So this just is just a way to show transparency. Plus, it's going to be reflected in your minutes. And then when you go back, you know, because someone says, hey, didn't we have $5,000 in the youth fund? And then you go back and you've got the financial statement as your audit trail, you've got your minutes, and you say, yes, we had $5,000. The donor had a stipulation that it could be released from this restriction at this point in time for this reason, and we can see how that's happened. All right, does that make sense? Any questions on that? All right. Now let's just look at expenses, and we can see that we had, you know, worship, outreach, youth, general and administrative. These were all operations. Okay, none of this came out of our restricted fund, and then we just have totals. Okay, so we've got totals, cross-footing, totals going across, and totals at the bottom.
On
All
that
right.
topic, we have a question.
Mm-hmm.
This treatment of reports / layout is not likely to be provided by accounting software reports, but this is our presentation of the figures in Excel.
This is in Excel. There are software systems that will present it this way. This is the proper way to present it, and I want you to be aware of what the proper way to present it is. If you have software that's used for the corporate world, it's not going to have this ability, right? Because it's not used to it. It doesn't understand this. It's only going to be able to do it for that. But there are workarounds so that you can present this information to your vestry. All right. The other column, and I didn't put it on here because I don't want this to be too completely cluttered, is that you should have a budget column, right? And then the difference. Okay. I was just afraid if I did it, nobody would be able to see it. But anyway, but you'll also want a budget and then the difference. But my main point here is just to show you how this should be presented so that you can see the difference between the expenditures and income coming in with and without donor restrictions. All right. Okay. Okay, hopefully it switched over.
Yeah, you're good.
Okay. All right. So when you're looking at this, what are you looking for? All right. You're sitting in a vestry meeting, sitting in a bishops committee meeting. What do I want to look at? I want to see, are we operating at a surplus or a deficit? And what's the reason for that, right? We also want to look and see, like, are these balances, are these expenditures, is this income normal for this time of the year? Because what happens to pledge income or plate and pledge typically in the summertime, right? Oftentimes people go on vacation, so it goes down a little bit. Another reason to get people on automatic payments, but I digress. What happens to your pledge and plate during Holy Week or during Easter or during Christmas, right? You would expect to see it go up. So you need to keep that in mind as you're reviewing this. And then again, are the balances normal? Okay, because what happens if you look at an expense balance and it's like the wrong way? Well, something got recorded improperly, probably, right? And so just keep that in mind too. And how does your spending compare to budget? And is it reasonable? Is it expected? And again, remember that, you know, sometimes expenses aren't paid ratably throughout the year. And we know that the income doesn't come in ratably throughout the year. We would also expect that electricity is going to be higher in the summer because you're using air conditioning, or maybe your gas is higher in the winter because you're heating the building. So just different things to keep in mind. Again, you want to make sure that the corpus of the endowments is being maintained and that your donor restrictions are being honored. All right, questions on this? Okay. Now, these two statements do tie together. So let's look and see how that works. All right, so this is a smaller version of what we've already seen, and I hope you can see it. But this over here is the statement of financial position, okay? So as you recall, we've got the assets, the liabilities, and our net assets. And remember, we had the ones without donor restrictions and with donor restrictions, and then the total. So let's go over to our statement of activities or our P&L statement. We can see everything that adds up here, adds up. At the end of June, the total is $617,500. And you see how that number ties from your statement of activities to your statement of financial position. That's how these work together. All right. We go over here, statement of activities, P&L statement. The total, the change now, our total at the end of the month in all of the funds with donor restrictions. And this donor restriction fund, this could be it's a combination of organ, altar guild, building, etc. But they have donor restrictions. The $350,000 go over here to your statement of financial position, and voila, there you go. There it is. So you see, so if these guys are not agreeing, you've got a problem. And then you see the total of all these net funds, 967,500. And here we go, right here on your statement of activities. All right. So, I mean, and in some ways, you might be thinking, oh my God, this is so complicated. I didn't realize this, but see how organized this is? This is why accountants love numbers, because they just work. Everything balances, you can tie everything out, you know. It's just a happy way to do life, you know. And where at other place can you make a mistake and correct it, you know? It just is life is good. All right. All right. So just remember, accounting is a system. It makes sense. It's organized. It works. So if something goes wrong, just recognize, you know, this doesn't look right. There's a way for us to fix this. So just keep calm. You can all work out. This is just one of the blessings of accounting. But as long as you have kind of an understanding of the nuts and bolts and how it's supposed to work, you don't have to discover the error, but you know there's an error there, or you know everything looks fine. It looks balanced. This is what we expect. The budget and the expenditures, they all seem to be in line. We've got cash in the bank. Life is good. All right. There are also a couple of really good resources. There's a manual of business methods. There's a link for it there. It also is available in Spanish. And that is just a super good reference. If you've had one of these on your shelf, printed out for a number of years, go back to the website, reprint it. It was revised a couple years ago. If you have questions, you can email me. There's my address, or you can email EDLA's finance office, and there's the email for that too. So other questions, a couple of things. I mean, I hope this was clear, and I, you know, appreciate any feedback. Also, if you have ideas or things that you want to have a presentation for in the future, if you could let me know or put it in the chat, that would be great. And yeah, your statement has to balance every month. Absolutely. So look at your statement of financial position, and it needs to balance. That is a non-negotiable.
We've got another question about accounting software. Where do you get accounting software?
Okay, so there's all kinds of accounting software out there. Many churches use QuickBooks because A, it's easy, and B, it's cheap. It's also, when there is an embezzlement, the most common software that's been used, because when you can make changes and there's no audit trail. So for that reason, I strongly discourage people from using QuickBooks. All right. One of the good softwares, a good software package that's out there is Church Windows. Church Windows is a little bit more complicated to use, but there's an audit trail. So someone comes in and they do the bank rec, you know exactly who's doing it, what entries were made. If they mess up, it shows the correction, all right? You can't make a journal entry and undo anything without having an audit trail. It records everything, okay? So if you have someone who gets really nervous about having someone see how many mistakes they've made that they've corrected, don't worry about that, okay? What you need to have is a software system that's secure. So Church Windows, it would be something that I would highly recommend. There are others that are far more complicated, but they're more than you need in your congregation. So, and with Church Windows, you can also get modules that you can add to it, so you can record all your track all your pledges. You can even track membership on a different module. You can track you know, birthdays, wedding anniversaries, you know, all kinds of other stuff. But the financial package itself is pretty straightforward, and it's also online.
All right.
Any other questions?
Questions, comments? Go ahead and put them in the chat. Not seeing anything yet.
Okay.
So
Was
if
this
you
helpful? Did it help you kind of get an overview of the financials? Yeah. Okay.
Yeah. Oh, we do have one question about
Okay.
long-term financial planning.
Yes.
Just what about it?
Yeah. So, I mean, that's so important. And thank you for asking that. So my recommendation is that, like, at your vestry or your bishop's committee retreat every year, that's something that you have as a real important item. Like, where do we want to be in a year? Where do we want to be in 5 years? You know, and have a projection, have a plan, you know, something that fits with your mission statement. You know, maybe right now you're not able to do the outreach that you want. How can you get there? And how do you communicate that to the congregation so that you can get the donations you need for a specific ministry? Remember, people want to give, but they need to be able to trust that the financials are accurate and that the money is being used for its appropriate purposes. So being able to understand these financials and being able to show them to parishioners and explain them to parishioners is going to do a world of good in people being confident enough to give, and to give for special programs too. If they give for a special program, they want to believe that that's where that money's going.
So absolutely, transparency is key.
Yeah.
Okay. So yeah, I've written this down as a potential topic for a future workshop, long-term financial planning.
Okay.
The accounting software you recommended was called Church Windows, right?
Yes, Church Windows.
Okay. All right. Okay, great. So yeah. We're about 5 minutes till. And thanks. All right. So I just want to say thank you so much, Reverend Michelle. Thank you, Ada. Thank everyone for joining us this morning. As a reminder, this recording will be posted on the Diocesan Facebook page and YouTube channel, and the resources are, I've just actually posted it on the EDLA convention website at www.diocesanconvention.com/workshops. I've posted the slides as a PDF, as the PowerPoint, and also the sample Excel spreadsheet we were looking at. If you do have any follow-up questions, make sure to contact your diocesan finance office. If you're in the Diocese of California, that's Michelle R. at diocal.org. If you're in the Episcopal Diocese of Los Angeles, that is finance@ladiocese.org. And so thank you again for joining us, everybody, and I hope you have a wonderful rest of your day. Thank you so much, everyone.